Grab is up 23% year to date, and it has really turned out to be the super app of Southeast Asia. A lot of people are interested in Grab, a lot of toots are interested in Grab, and the overall sentiment towards Grab is quite bullish. They have quite a strong, fundamentally sound business. So today I'm going to look into could Grab explode in 2026, why I'm buying more shares of Grab, and at the end I will give you my price forecast on a bear, base and bull case scenario over the next 1, 3 and 5 years. Before we get started, if you like videos like this, subscribe for more videos. I am constantly investing in Grab, so any new news I will cover. I also have other stocks that I'm investing in and other videos I may enjoy, so make sure to click that subscribe button, leave a like and comment why you're invested in Grab. So for anyone who doesn't know, Grab is a super app of sorts. I'm going to keep this short because there is other videos on my channel that you can watch to get a more complete overview. But Grab offers ride hailing, food delivery and grocery delivery. They now have financial services, which entails loans and other things, event bookings and bookings for experiences. And they're constantly expanding their product portfolio and bringing in new things to keep the customers retained and bring in new customers. But really, it's quite an exciting app for anyone in Southeast Asia, where they can go in and pretty much do quite a lot of functions that you can't get unless you've got 10 different apps over here in Europe. And if we do a quick look at the share price, they are currently trading at around $5.85. That is currently, they have just had the earnings, which I'm going to dive into first, and then we'll go on to the price forecast. Just a quick disclaimer from me, anything said in this video is not financial advice. Please remember your capital is at risk when investing and you could lose that money. Please go away and do your own research before investing and possibly speak to a certified financial advisor. Anything said in this video is for information and entertainment purposes only. I've gotten all my information directly from Grab's reports, and my price targets at the end are my personal price targets for the stock. That is not financial advice. I cannot guarantee it is going to go to these prices. This is just my forward thinking. So like I said, they have just reported their Q3 earnings and they were quite exciting. I'll be putting up little extracts here and there, but let's jump straight into that. Revenue grew 22% year over year, so that's gone up to 873 million. On-demand GMV grew 24% year over year to 5.7 billion, which is a new record for Grab. Adjusted EBITDA was up 51% year over year, and adjusted free cash flow was up to $283 million. Now, if we break it down into segments, the mobility services was up 17% year over year at $317 million. The financial services up by 39% year over year to $90 million. And the loan portfolio is up 65% year over year and is currently sitting at $820 million. And then deliveries is up 23% year over year, and that is currently sat at $465 million. So really massive growth across the board, really positive, and continuing to see that trend within Grab's earnings, that they're just constantly step casing up their financials. We are now 1 quarter away from 1 full year of profit, so that's going to be very exciting if that lands. Off the back of this, they have upgraded their guidance for the full year, so revenue is now tipped to be $3.38 billion to 3.4, which is a 21 to 22% year over year growth, whereas previously they stated 19 to 21% year over year growth. So it's just a slight upgrade to the guidance, but the lower guidance is now the maximum of what they set out at the beginning of the year. On top of that, they've upgraded the adjusted EBITDA guidance, so they now believe it's going to come in at 490 million to 500 million, which represents a 57 to 60% growth year over year, whereas previously they were projecting 460 to 480 million, which is 47 to 53% growth year over year. They also stated to come in their Q3 highlights, they have got the first autonomous vehicle service to launch in Singapore by early 2026. This is in partnership with another company. And then they are integrating May Mobility for autonomous driving tech. So this is more focused around the fleet management and vehicle matching and routing system for the drivers, which should hopefully drive efficiencies and make it an overall more efficient operating model. So that's everything I feel like I need to highlight out of the earnings, but I have took extra notes from the earnings call itself, so I'll read them out very quickly because there was some very impressive things in there. So monthly transacting users was up 14% year over year, with daily transacting users growing faster. And then on-demand transactions grew 20% year over year. 1/3 of new monthly transacting users come through their saver deliveries, and high-value rides grew 66% year over year. And priority deliveries are also growing quite fast. So they said that they are seeing growth at both ends, and they seem quite happy about that on the call. And as an investor, that's quite good because that means you're not squeezing out your current users. Looks like people at both ends of the scale are starting to use the app over in Southeast Asia. They also said that the GMV spend per monthly transaction user grew 7%, which shows that the cross-sell is deepening value for current users on the platform already. Point 2 that I picked up on was that they feel that the monthly transaction users penetration of Southeast Asia is still quite low. They continue to list 3 sustainable elements that will continue them to penetrate that monthly transaction user count. So they've got product-led viral growth, and this is through family accounts and group orders, which sounds like quite a good feature. So basically, you're out with your mates or at your mate's house, there's 5 years, you all add in your basket, pay for it separately, but it all comes through one delivery. They have a strong Grab Unlimited base, which is a subscription feature. So this is now the biggest paid subscription in Southeast Asia, with 14% growth year over year to all-time highs. And this also accounts for 20% of the delivery base. And then the third sustainable element was Grab More, which allows food users to add grocery to their food delivery, and it's proven to be quite popular. And this allows them to penetrate the food base more to grow that Grab Mart feature. The third point I picked up on was around their financial services. So they are predicting acceleration of loans into 2026. The model is constantly developing to ensure that they get the best returns from minimum risk in the finances that they loan out. And it's allowing a lot of the population to build a credit score for the first time in that region, and a lot of people are utilizing it. So it looks like it could completely shift the finances for the region. And then the fourth point I picked up on was around advertising. So they did state the bigger they get, the more attractive ads get for merchants on the platform. The total number of quarterly advertisers increased 15% year over year, and many of this went through the self-serve capabilities. So Grab don't even need to intervene there, they just need to make sure the infrastructure is working and in place. The average spend per advertiser grew 41% year over year due to the effectiveness. That is insane growth. So I've put in capital letters, advertiser machine incoming. Obviously that's just an opinion I got from there. And then they did say on the world trend that grocery businesses spend more than food businesses on ads, which they currently don't have. So as GrabMart grows, they look forward to seeing this metric reflected in their finances. So I think that's all very exciting. Overall, the earnings call and presentation I think was fantastic. As an investor, I was chuffed with that. Not only have we had good earnings, we've also had some positive news about Grab. So I've got 3 main news stories I'm going to cover, and the first one is they are investing $60 million into VE, which is remote driving. This will allow them to tap into autonomous vehicles a little bit better, and they are quite based around the US region, so that's quite interesting. And if milestones are hit, Grab will invest a further $350 million in the first year alone. So that's quite a substantial amount. And these milestones include consumer revenue, more US cities covered, the technology, safety standards, and further reg approvals for further cities. So overall, that's quite positive. And if they've set these milestones, that will activate more investment. That clearly means Grab sees a positive future in VE. The second news story was the Indonesian government backs the GoTo merger. So state investment fund Danatara want to take a golden share in the entity, which would mean they get a better voting rights, I believe. And an alleged meeting has occurred with the government, but GoTo, Grab, the government and Danatara would not comment on this speculation. But if the GoTo merger goes through, this would result in a 91% market share in Indonesia alone, which is massive. And the third story is related, but SoftBank are moving to remove the GoTo CEO apparently. So SoftBank are a huge investor within GoTo and they have quite a lot of voting rights. And they believe this could reopen merger talks as the current CEO is quite against the merger. They've called for a general meeting after a 40% drop in the GoTo market value, and this meeting is happening on December 17th, but GoTo deny that this meeting is related to the merger in any way. So that's three interesting stories that are all related to either further investments or a possible merger that will see them swallow up the market share in Indonesia. So let's move on to my price target analysis. Please be remembered, this is not financial advice. This is my own personal targets. And the way I've calculated this is, I'll put the formula up on the screen, but I've done a bear case, a base case and a bull case over the next 12 months, 3 years, 5 years. So for the bear case, I've looked at a CAGR of 15%. This is currently below what they've been grown at annually for the past few years, which is around 21%. So with a CAGR of 15%, in 1 year we can see the stock price being at $6.73. In 3 years I can see the stock price being at $8.91, and in 5 years I can see the stock price being at $11.79. So really in 5 years time I can see this still doubling, but it's not the growth that a lot of people are hoping for. So if we look at a base case scenario with a CAGR of 21%, which is what they're projected to do this year, if they stay on this track, after 1 year I can see the share price being $7.09. After 3 years I can see the share price being $10.38, and after 5 years I can see that share price being $15.20. So obviously if they keep growing at the rate that they've grown at this year, which is 21%, and they are predicted to do 21 to 22, so they could even slightly beat that at this year, within 5 years I'm going to possibly see that share price nearly 3x for me. So that's promising. And then if we get onto my bull case, which is a CAGR of 25%, so this is just slightly higher than what they're currently achieving, and I wouldn't say it's out the realms of possibility, but we haven't seen that growth yet across the board. So I think this would really depend on how the individual segments start doing. But after 1 year I can see the share price going to $7.33. After 3 years I can see it going to $11.45, and after 5 years I can see it going to $17.88. Let me know what price targets you've got for Grab in the comments below. And then I've made note of catalysts that I think could push this share price further outside of what they're currently performing. So I've got 4 catalysts, and that is the GoTo merger that could significantly change these forecasts for me. It's high financial growth, so if they start to beat that 21% base case or even the 15% bear case I put on, we could see this go even higher. They are obviously diversifying their investments and their partnerships, so I've said strong investment performance could push this stock price higher. And then new successful features on the app that continues to grow their monthly transacting users, daily transacting users, and their overall customer base, I think could really be a catalyst to push the stock price even further. And that is it for my analysis on Grab at the minute. So I've given away the Q3 financials, any news of note, and then my price targets or analysis of where the stock could go. Please leave a comment on what you think could happen in the future, and if you are looking at Grab, I think 2026 could be a really solid year for Grab, especially if that GoTo merger goes through, which would be quite exciting. But yeah, I'm quite long on Grab. I think as a business they are very fundamentally sound. I think they're one of the stronger fundamentally grown businesses that I have seen, and it's just small incremental growths that are solidly underlying this overall growth for the business. I just think it's an amazing business. I wish we had something in the UK that was a one-stop shop like Grab. But if you have enjoyed this video, please leave a like, comment your thoughts below, and subscribe for more, and I will see you in the next one.